Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Welcome to the podcast Become Sensible, where we discuss about practical business finance and tax and business growth for everyday business. So today we talk about a very common mistake that I see business owners and startup make. They overpay in tax. So I hope that by the end of this episode, you will understand more about common mistake, exactly how to fix them, and also build your awareness and more comfortable to talk with your tax professional in terms of your tax situation. I think the psychology of tax overpayment is this. Tax code is complicated in itself. And most of the time, many business owners busy with day-to-day work, they don't have a time to actually make a research in terms of tax codes, and also tax codes change all the time. So you feel is this so confusing and complicated? And then on top of this, your professional tax people like CPA or tax accountant never actually discuss with you or actually help you to understand what is the change in terms of tax codes, what will help you and benefit in terms of your tax situation. So combine those two, make you feel the tax office will come and check with you, or the IS will come and check with you about certain thing in terms of your tax situation. And so you say, okay, I just want to make sure that it's everything it costs and I will not do something wrong on it. Or okay, I just try to comply. And you never actually discuss in terms of how deep dive and how certain tax codes is more suitable for your situation. Number two is sometimes you set it and forget it. But one of the things is happening tax code is they change all the time. There will be some of the tax will be expires, and the new administration, a new Congress will put in a new regulation, a new rule that will be affect many people. So one of them is qualified business income deduction. It will expire by the end of this year. If the Congress not extend it into the next 4 years, will expire at the end of this year. No one actually understand. That would be affect a lot of small business owners in terms of tax deduction. So that is why the mentality of set it and forget it not gonna be work, because tax change a lot in terms of regulation and administrations and the Congress term who's in the position. And then many people do, well, then number three is they just file the tax, finish up the year, file the tax, and they never actually understand what is going on, go through their tax situation. I see this all the time that clients, our clients, new clients, the first time they understand every single line on their tax return. And the thing is, if you don't understand your tax situation, even if it's the most simplest tax situation, but if you don't understand it, you're not going to have a strategy or do the thing that would benefit for you in terms of tax. And of course, we support for doing things legally. We're not saying that we will do something shady or not legally at all, but there's a lot of tax code that you can select and use this for the benefit of your situation. Now we're moving into some common overpayment scenarios. One of them is any business owner who buy a business, they never use the Section 179, because when you buy a business, there's certain things that can be classified in terms of tangible assets. Some of them become intangible assets. And this thing it can help you to get the depreciation over time. And many business owners don't actually pay attention in this. And if their tax accountant not pay attention, you will miss that deduction. Number two is poor timing in terms of income and expense. Sometimes especially small business owners, you are on cash basis. And cash basic is like you count income when the money hit your bank account, and you count expense when the money come out of your bank account. So sometimes you pay the contract later, but then the expense side of it is like the income coming in before that. That make you to like report a higher profit, and that's the timing in between income and expense was like wrong, and make you like have a high profit and you end up like overpay tax on that part of the profits of your business. Number 3 is like incorrect structure election, and this is selection. This is like I see this again and again. So many companies like eventually you want to raise fund public funding, or like you want to sell the company. And many people that use is just single member LLC and don't select it as a C corporation. Eventually, when they sell it, they couldn't get the benefits of like qualified small business stock, and that is like help you like to avoid capital gain up to like millions of dollars in terms of capital gain, and that is one of like a very popular mistake. The next one is missing like travel related deduction, any material, anything that you buy and use for your business, but like you feel like it's just, especially the many business like operate online and they don't have a like physical office. So sometimes you go and buy for your family and then you buy and use for your business too. But like many of them is like office supply or like material for use for while you working. You forget to actually count all of these expense and it add up together. So that's make you like don't take the deduction and make the profits of the business high. Some of them also like because many people use personal credit card to pay for like some certain business expense when they go travel or when they go to buy supplier, and they use personal credit card to pay for this, and they forget to actually account for. And that is why it's very important to have a bookkeeping done on time, because this is help you to like categorize and capture all the expense that you don't miss the deduction. And honestly, some of our clients basically like can save $20,000 in terms of tax because they catch all of the expenses randomly based on many different cards and many different like banking on the personal side of there. And that is why like to be separate and use everything in one credit card and one business card or something that help you to like categorize and don't miss these transactions. So that just help you like save you $10,000 or $20,000 in tax for those things. So some of the hidden deduction that most people miss is like deduct margin interest. If you have a broker's account that you active trading, and if you borrow between your broker's account to make like the trading of the stock, that's would have a margin of interest on your broker's account. And many people wouldn't like take that margin of interest. Like sometimes it's like 10, 20, or even like $30,000, $50,000 of interest because you borrow again a bit and then you make trading. There's many people who active in trading stock need to like pay attention on this part. Some Section 179 that many people forget. Some forget in terms of development costs, like relate to professional development costs. Some relate to like work related to materials or office supply. Some forget the home office deduction. Some also like forget in terms of like interest is spent on the business loan that you actually need. Like many people who like borrow money from Stripe, Square, or like many SBA loan, you basically can take the deduction of the interest part on those loans, and or like the financing processing fee. Those need to be the tax deduction, and I see it all the time. People like just miss this huge, and it's like thousands of dollars in terms of the deduction, and people basically like miss it. So how to avoid and help you avoid overpaying tax? Number one, get your bookkeeping done very regular. review all of these bookkeeping financial reports to know like everything will taken care and what kind of transaction go to your book and what kind of expense going to your business. Number 2 is have a tax planning section. Like basically like talk with your CPA or your accountant. There's not many people actually offer this on the markets at all. And that is why like they don't talk with their client about, okay, if you do this, how it will help you to save in terms of tax. But that is one of the most important things that you need to discuss with your CPA or your tax accountant at least once per year. Like our company, many of our clients, we discuss like at least 2 times, 2 quarters per year, so that they know, okay, what is the estimate of their tax liability and how they move things forward, so that they can like save in terms of tax and also like know their strategy part. The other thing is plan a timeline, because if you like discuss about like the tax planning and like December 25th or 28th or like the last week of December, there will not enough time for you to actually implement these things, especially like anything that like long-term move, like for example, buy a business, buy a property, anything that make like lengthen process, you need to like discuss this way before the end of the year so that you can like prepare in terms of money and move forward in terms of like how is the roadmap. Give yourself a couple months to actually do that and like keep track is against your goals so that your progression is like toward the goal that you set before. And then have a like accounting software and any tool will help you to track in terms of the deduction. And as your business grow, the more your business grow or your financial situation getting more sophisticated and complicated, you need more in terms of tax planning and professional support, so that when your earnings, it needs to be like move in the next couple like different way to help you to reduce in terms of tax and saving in terms of tax. There's tax code to help you to move those things and use it to build like the nest or something in terms of financial goal. And I think one of the things that people make a mistake that they don't understand it, like saving in terms of tax will help you to have a tremendous, like well building and well planning. You need to go with tax planning. As a business owner, a CEO or your own business, there's a couple of things integrated together. Your business financial plan, which is financial budgets and setting goal, strategy, tax planning, and wealth planning. It needs to be like integrated together, so it cannot be like just one single conversation, because that help you to like setting a goal in 5 years, 10 years and moving toward that goal. And I think like people always they underestimate the role of tax planning in the part of the overall your financial well-being. So I want to remind you that like even $5,000-$10,000 every single year that you can save in terms of tax, it will give you a tremendous impact on your wealth network in the next 20 years. And I hope that this episode will help you tremendously in terms of understand how the important it is to have a like tax strategy, tax planning, understand where is the thing that you normally, most commonly like make a mistake or error in terms of your tax, and then get a conversation with your tax professional going on. And of course, on our website, we have a tax checklist to help you with the tax season. So if you have any questions, please let us know. And thank you so much for your time. And I cannot wait to see you in the next couple episodes. Bye-bye.